And on that note, recording started. Welcome everyone to the Price Action Labs order flow based webinar. Okay, so how this webinar is going to work is, for those who've been to some of my webinars in the past, you know I like to keep them interactive, and you know I like to keep them somewhat engaging and hopefully a little bit entertaining. Probably not that entertaining. This webinar is going to be primarily education based. And so at the end of this webinar, you will be, I hope, an expert in the order flow basics. Okay, so for those who are new to my webinars, some of you are maybe a little bit new, I just want to welcome you and say welcome to Price Action Labs. We're going to be having a thorough sort of educational webinar today on the premium footprint execution process. These are the 4 Ps to mastering trade execution. We're going to be going into the system in quite a lot of depth today. So if you brought a notepad and pen, that's fantastic. We're going to be breaking things down. Okay, so let's get into it. So flow state, right? Why have I built flow state? And more importantly, what is the software or the sort of the system behind flow state? Flow state is essentially a software that helps you find key levels in terms of volume and time. Because as a trader, there's only 3 things you need to determine a trade: time, price, and volume. So in other words, you need to know what price to trade from, so your key level. You need to know what time to trade, and you need to know in terms of volume where the volume is high and low, because the worst thing to do is take a good trade and get chopped up in low volume. Okay, so I'm going to start off by asking all of you a simple but, in my opinion, effective question. Okay, so this is where I want you to go into imagination mode, and I want you to imagine this for 5 seconds. What if you never traded alone again? I'm going to give you some brief context here. If there was a software that told you where to trade from, when to trade from, and why to trade from every single day, like the trades I'm going to break down later on, if you had a software to do that, would that help you in your trading? Just type yes or no in the chat. Yes or no in the chat. %. We've got some good answers. Yep. Okay. And so this is the purpose of order flow, right? So I want to introduce you to a concept which I call the C3 connection code. Okay, I just stopped sharing my screen. Sorry, give me a second to redo that. I want to introduce all of you to the C3 connection code. Okay, so what do I mean by the C3 connection code? The C3 connection code I specifically refer to as 3 things, right? Clarity, confidence, and conviction. So what do I mean by that? You need to have clarity in what you're looking for. So clarity comes down to the trader's terminal, which is essentially your levels, volume, and time. So time, price, and volume. That's how you get clarity, by knowing what you're looking at. So clarity is about knowing where, when, and why to trade. Confidence is built from repetition of being clear. So the more clarity you have, and the more you repeat those systems, the more confidence you will have. And ultimately conviction, because when you hit that buy and sell button, when you risk $100, $200, $500, $750, like I did the other day and also today as well, $1,000, when you're risking your hard-earned money, you want to do it with one thing, and that's confidence. Conviction. You want to have conviction in your trade, and conviction comes from confidence, and confidence comes from clarity. And this is what I call the C3 connection code. Okay, so just type C3 in the chat if you want to master the 3 C's by the end of the presentation. Just type C3 in the chat. All right, use a capital C if you're really determined to do it, and use a lowercase c if you're, not so much. C3, the C3 connection code: clarity, confidence, and conviction. Okay, so how do we do this? So this chart over here, all of you will know, is pretty much married to the Price Action Labs logo at the top, as you can see. Now, inside of every candle, there are buyers and sellers, or their sell orders and their buy orders. The art of building the C3 connection code, I'm going to keep referring to the C3 connection code. It's going to be one of the embedded topics and themes throughout the presentation. Building that clarity, confidence, and conviction will ultimately come from the charts you see on the left. Okay? You want to read the markets, not guess them. Okay? That's the boldest line in the entire presentation. You want to read the orders and not guess them. Okay? And so why do we do that? So here's another question for all of you. What if you could read every single setup like a book before you entered? Now, before all of you say, that doesn't mean you're going to understand the book every time or you're going to understand the message. Now, that translates to you're not going to win every trade, you're not going to catch every trade, not every trade's going to go your way. But when you get used to reading, you get more confident, you have more clarity, and you can execute with precision, conviction. So, what if you could read every setup like a book, right? Type yes in the chat if that sounds somewhat appealing. Type yes in the chat. Yes. One yes so far. It's all right. It's okay. So, this is why I've built the C3 connection code. This is why I built FlowState. This is why the premium footprint execution process exists. It's there to keep your emotions in check. Okay? So let's get into it. Now, FlowState and the premium footprint execution process is designed to tackle some major problems that traders have, that I used to have, and I still have sometimes, a scattergun approach. So I was talking to a few traders recently. I was talking to one trader just before the webinar even began. And a lot of traders I speak to have somewhat of a scattergun approach, meaning one week you're trading fair value gaps, next week you're confusing it with order blocks, next week you try and integrate some RSI or indicator to it. The next week you might try and fit order flow into all of it. The next week you might go back to trend lines. You have a scattergun approach, right? Which means if you imagine an artery, those artery boards that people shoot on? If you imagine the bullseye, which is what you're trying to hit, a lot of people, their trading feels as if they're trying to hit that bullseye and they keep missing the entire board, right? Bit of a crude analogy, but hopefully you get my point. A scattergun approach is no good for nobody. Okay. Howard has asked a good question. Yes, but doesn't FlowState read it for you? Yes, it does. FlowState, if you have a level and you want to confirm it's a level, FlowState will read it for you. Yes. So, and that's one of the things FlowState does, is it removes the scattergun approach because you go from what I call guessing and gambling to reading and reacting. Howard, I think you're unmuted, and I hear a little bit of background noise. If you don't mind muting yourself during these times, that's fine. If you have a question, you can unmute yourself. That's not a problem. So a scattergun approach is what we're trying to avoid. Next is no consistency on prop firms. And so prop firms are amazing and they're great and they're fantastic. The only downside, in my opinion, to someone who's not as clued up with prop firms is that prop firms give you what I call a very, very easy reset button. So imagine you're walking on a tightrope, right? When you're walking on a tightrope in trading, when that tightrope snaps, sometimes the fall to the ground can be pretty steep. It can be a long fall, right? If you're risking your rent money or your hard-earned work money or your pay slips from work and you're putting it into a brokerage, that fall when the tightrope slips can be a lot. But the problem is with consistency, the ground is only 6 inches off the floor because you have that reset button. Reset buttons are great and prop firms are great, but when you use the reset button as a way of hiding behind your own insecurities in the market, oh, I failed, I'll get another one. Oh, it was my psychology, I'll reset and get another one. Oh, my strategy was good, but this week I didn't follow it, I'll just get another one. The reset button is destroying the mental fortitude of traders. Now, if this is you, that's not a bad thing. Resets are amazing, prop firms are amazing. But the lack of consistency you have on prop firms will not be fixed by the reset button. It will not be fixed by your psychology. It won't even be fixed by a proper strategy that lacks order flow. And that's what the presentation is for. Next is your entries feel unrepeatable, or they don't feel repeatable, if that makes sense, right? Your entries do not feel repeatable. It means one day or 1 week you're entering off EMAs, the next week you're entering off order blocks, 1 week you're entering off a 4-hour candle, a 1-hour candle, a 15-minute candle. No matter what, it doesn't matter what it is, right? When your entries are not repeatable, your results will not be repeatable. And so that's what great Mark Douglas said. He goes, the consistency you seek is within your mind. Consistency leads to repeatability. Or repeatability leads to consistency. It doesn't matter how you have it. And so when your entries do not feel repeatable, this is where people lose hope or they lose confidence, right? And the final thing is you feel stuck at the same level. So it doesn't matter how hard you try or what information you look for, or even worse, resetting on prop firms. It feels as if something is missing that's keeping you stuck at the same place. So I want you to, and this is going to be a bit of it's going to be a closed-ended question, but I want you to type yes in the chat if you've gone through any of these problems in the past. And what I'm going to do is I'm going to start, right? Yes. Yes, I've definitely gone through these. Definitely gone through these. Yep. Fantastic. Yep. Okay, only one person. That's good. That's good. That's good. That's or two people now. That's good. That's good. That's good. Anyone else? Yep. You know what? I'm gonna say yes again because sometimes it does happen. It just happens, right? It's part of the game. This here doesn't mean you're a bad trader. It means you're human. Okay. So what flow state does, or specifically what the premium footprint execution process does, is it flips the script on all of these issues. And this is how it does it. So, for example, I had a scattergun approach with no clarity. So I was trading something called chalk back in the day, changes of character, fair value gap, sweeps, Asian ranges, fibs, trend lines, support resistance, RSIs, MACDs, any strategy you can name, Bollinger Bands, Ichimoku clouds, any indicator strategy or approach that you've heard of, I've likely tried it. And so that led to me having a scattergun approach because I tried to use 3, 4, or 5 different concepts all at once. Okay, so what does flow state and the premium footprint execution process help you to do? Well, it ultimately takes you to that C3 connection we spoke about with the markets: clarity, confidence, and conviction. Okay, because you want to have one clear plan every session. Every session you hop on the market, you need to know this is my level, this is where I'm trading from, and this is why I will trade from it. That's it. That's it. Next is inconsistency on prop firms. And so what order flow and the premium footprint execution process does is it gives you conviction in actually passing them, confidence in passing them, right? What if passing could be a repeatable process? What if passing a 100K account and banking even an additional $200 a day or $500 a day? What would that do for you? Just by being consistent. Entries you can start to repeat all comes down to a system. So the repeatability you lack is due to the system you don't have. I'll repeat that one more time. The repeatability or the consistency you don't have is due to the system that's missing. And so you need an entry system that's repeatable that you can follow every single time. Okay? And we're going to go later on in the presentation, we're going to go on to how you can do that. And you feel stuck and unsure, right? So it's kind of like a mix of all of the above. And so what if you always knew which level to trade from, why you were going to trade there, and what proof you have to trade there? What if you had the C3 connection code? That's what we're going to look to build. Okay, so why did I build this system and why is flow state so important? And so it's here to stop you do a couple of things, right? Course after course, indicator after indicator, blown account after blown account, and you're following what I call that boom and bust cycle. You go from blowing an account to passing an account, to then blowing it and looking for an indicator, then trying to pass again with another strategy, then going with another course and going with another signals group. That was me, minus the signals. I never did signals, but that was me. And so what we want to do is we want to build one clear system that removes everything on the left. Everything on the left we want to remove. And so how are we going to do that? We're going to do that with one clear system with the 4 Ps. Okay? Positioning, price, proof, and precision. So what Howard said is, yes, time to stop the madness. Okay? Time to stop the madness. Right? You know, the madness, it never stops. And what I mean by that is that there's always this thing in your brain that will cause you to chase the madness. Now the question is, how do you stop chasing the madness? The way you stop chasing the madness is by having the C3 connection code with the market. Clarity, confidence, and conviction. Create that plan. It's exactly what S.T.E.P has said, or S.T.E.P from Canada. Good to have you, man. Good to speak to you again. And it's good to have Howard here as well. And what Howard said is fantastic. Time to stop chasing the madness. So on that note, if you want to stop chasing the madness, or you've been through any of this madness before and you want to stop chasing it, just type plan in the chat, right? Just type plan in the chat, right? SD has already done it. Type plan in the chat if you want to move in that direction. Type plan. Just type plan. Okay. Who've we got? Yep. Okay. Anyone else? Let's see what else we have. Okay. Just gonna do this. Plan. Awesome. Let's move on. So right now, I see a lot of traders in a predictive state, right? They try and predict the markets, which is utter BS. You don't want to predict the markets. You want to react to what they're doing, right? If your entries feel like you're flipping a coin, that's a problem. If it feels like the market is speeding up or slowing down at times when you don't want it to, that's also a big problem. So I was talking to a few traders recently, and they use language like, I look for a big candle, a fast candle, a nice candle. Right? What are we doing here? I remember when I was in school, the teachers would make us write. In the UK, we call them English lessons, right? English literature or English language, and the teachers would say, describe an experience that you enjoyed, or describe this experience as if you were writing a book, or whatever those tasks were back in the day, right? The tasks which AI can do now. But anyway, separate topic. And I would have to use words like very fast, or big, or aggressive, or a nice move, or I would use adjectives in my writing. But what are we doing bringing that to the markets? Why are we using our adjectives on candles? Like, that makes no sense whatsoever. A nice move, a big move, a fast move, that doesn't make sense to me. Like, when a trader asks me, oh, I saw a big candle, I say, did you get a ruler out and measure it? Oh, I saw a fast candle, did you take a stopwatch out? Okay. So again, there's a problem there, right? So what we want to do is, what flow state does and what the system does is, it maps out entries and exits before the opening bell. Before the opening bell. And so this is what I mean. So what I'm going to do is, I'm going to show you an interesting little case study from today. So just going to break this down. Here we have today a key level, right? This is my favorite part of trading. For those who know me, I bang on about key levels. So today's key level 75, this is ES by the way, 75.30 to 40. And so this is, so not the yellow box, it's this box down here, right? This box I called before the market opened, right? So I branded this as today. So this is 7 to 10 hours ago, right? 10 hours ago. So what we're looking at is this. We had these key levels, right? And if we zoom in specifically, these were the two key levels I was looking at today. Here we have the key level 2, key level 1. For those who are in school, you will understand why it was a key level using the 4-step positioning process, right? And so what was going on here? There was a reason why this was a key level, right? 75.40 to 75.30. There was a reason why that was a key level. It's not my key level or your key level. It's the market's key level based on what it's done. Okay? And so there we go. So the move today was called from 2 up to 1. Okay, now if you go here again, this is I wrote this actually as I was making lunch, funnily enough. So this was on my phone, so you can see the screenshot looks a bit different. The idea is, when we have volume and we have levels and we have time, we just want to trade from one level to the next. And if your levels are correct with order flow, there is nothing else you need to do. Okay, there is nothing else you need to do. So 75.30 to 40, watch it. And all of you on your what's it called, on your back testing, I want you to go and back test this level, right? Not this level here, this is the break even. This level here, which I unfortunately could not really take huge advantage of, but it was a fantastic move. Why was this key level at 75.40 to 30 so significant? Like, why? Okay, so when you have your entries and exits mapped out before the opening bell, it removes every single psychological problem you can face. So that's why I made you all say plan. Because as SD said, you need to create a plan. You then need order flow inside of those plan levels, so you actually know what those levels are doing. And then you remove the guesswork. You have no guesswork. Because if you know which level to trade from, you have no guesswork. So that's all we're trying to do. We're trying to remove the guesswork. And guesswork over time leads to the fatigue cycle, or the mental fatigue cycle. Okay, so here's how the fatigue cycle looked for me, right? I want all of you to tell me if this is somewhat familiar or you've been through in the past. You're on a hot streak. So let's say you have a support line you've drawn from thin air or whatever. You've taken it from Signals Group. You're on a hot streak because you've seen 4 bounces and they've all worked out. Okay, you get overconfident, and I still get overconfident sometimes, right? Confidence will come from good execution, but you can get overconfident. And what happens is you end up blowing it. Not because that strategy didn't work. It never worked to begin with. It's because you got overconfident with something that was incorrect. Okay? And then you doubt and restart. And once you've restarted, you then draw another line that starts to work and you go on a hot streak. And so what happens is you build up, you go through the mental fatigue cycle of going on a hot streak, getting overconfident, blowing it all back, and then restarting the cycle. And this is what I call the mental fatigue cycle. And it really does break you down, pretty much like a building. Like I used to be a civil engineer back in the day. One thing about fatigue is that fatigue comes in waves. It comes in cycles. It's not something that blows you out. It's not like an earthquake to a building. Fatigue is like wind, snow, rain, and it's just constantly banging on the side of the building, right? And over time, the building will collapse. Not from one event, but from years and years of what we call fatigue, right? Your mind is the same. It breaks down. It breaks down through cycles of fatigue, right? Unless you blow all your rent money in one go, which I don't think anyone here has probably ever done. But the fatigue cycle is dangerous because it lasts a long time and it breaks you down quicker and more detrimentally than you think. Howard said blowing it back with interest. Yeah, yes, absolutely. So what does a fixed process do? It gives you an exact entry process, a pre-market plan, and a daily review. It's boring, it's repeatable, and it works. In fact, I'll show you how boring it is, right? I even highlighted my own boringness in the community, right? Because I actually said, yeah, I love staring at the same thing every day, part 3. So it's the same levels from Tuesday, Wednesday, and then Thursday. It's the same couple of levels every week. Your job is to find the levels, know what's going on in the levels, and then know when to execute at the levels. It's not any more complicated than that. It's complicated when you don't know how to do it. So here's an example of someone, right? Andre, 50K funded. 50K funded account, right? He's obviously very kind. He said, just being honest, your consistency is top of the line. Okay. Next, we had Aman from New York. All right. 50K funded again, 7 weeks. Finding key levels this way is so easy, right? It's easy because it's a repeatable, robust, and reliable system that builds clarity, confidence, and then conviction. Okay. Next, we have James Brown. He's a solid student of mine. He catches sometimes better trades than me, right? And so this is a guy who trades 20 grand. I think he's probably up to 50 grand at this point in his personal account, making $500 to $1,000 per day with losses too, right? Because everyone takes losses, right? So in fact, look at that on the screen. James, if you could do even 25% of what he's doing, even $250 a day to get started, personal or funded, doesn't really matter. Would that be life-changing? $250 per day or $500 extra per week, right? Type 250 in the chat if you want a system to get you there. Type 250 in the chat. Asaya says absolutely. I'm not sure what number he wanted. 500, 250? Not sure. I'll go with 500, but 250 is great to start with, right? Risking $250 to make $250, right? Or risking even $100 to make $250, that's a bet you want to take every single time. And here's the thing. If you can risk $100 or $250 to make 500, you can risk 500 to make 1,000, like what James does sometimes. Okay? So now the question is, how do we get you there? What is the process? So anyone who has a notepad and pen, this is where you want to get it out. Or if you want to take notes on your phone, this is where you want to get it out. You don't need to record the screen because this is going to be recorded and put on YouTube in the next 24 hours. So how do we do this? What is the process to get results like this? And so for those who've been on calls with me and watched other YouTube videos, you will know what the premium footprint execution process does. And I want to break this down in a lot of detail, essentially. So you walk away thinking, okay, that's the process. How can I do it? So we start with positioning because a key level is all you need to be successful. A key level is all you need to be successful. If your key level is correct, ultimately you have good positioning. Ultimately, everything else will fall in place. So having good positioning is critical. Next is price, which is where reading price action becomes incredibly important. Reading price is where we go from guessing and gambling to reading and reacting. So we have the read protocol to help you read price correctly. Next, we have proof, because a lot of people ask me, okay, I see these numbers in the candles and I see the red delta, the blue delta, the zeros. How do I use that to my advantage? How do I use that to know whether to buy or sell? Okay, so we use something called the trap trading framework to help traders get there. when you know who's in control of the market at a certain level, your job is done. Your job is to sit there and wait for the market to show you its hand. Okay? This is where proof comes in. Because when you want to sell, we're going to go through a sell trade from Tuesday. When you want to sell, you better make sure that sellers are in control. And how do you do that? Well, you better make sure the market's told you that. And how do you know if the market's told you that? Well, you better have visual proof. You better know who's trapped. So if you want to sell, buyers have to be trapped. And that's why I call it the trap trading framework, because you need to have trader reactions at price. When you read the trader reactions at price from 2 to 3, you know who's trapped. And then we link it with precision. You need to have a precise entry model at the right level with the right reader price and the right proof to give you a precise entry model. And so you can take a picture of this at this point if you want. This is the premium footprint execution process. It is the 4 Ps to essentially profitability. It's the 4 Ps to mastering price action on futures, Forex, options, crypto, stocks, and just about anything that has a buy or sell button. Okay? Awesome. Okay, and this is sort of the engine behind flow state. So let's just dive into a couple of things at the time. I often get questions about how do you find your key levels. This is the most asked question I get is why was at a key level or what was going on at their key level. So in other words, how did you read the market and what was going on at that price? And those are the questions you want to ask, right? So how do I find my key levels? Market structure, targeted liquidity, equilibrium, and price imbalance, otherwise known as a fair value gap. There's no point using fair value gaps by themselves if you don't have structure, liquidity, and equilibrium in place. In fact, I'm going to give you a quick example to illustrate that now. Because if you go to, for example, Tuesday short, I'm just going to break down Tuesday short, for example, right? So I love staring at the same thing every day. Here we go. So shorts off this level. Now, if you look at it from the 4-step positioning process, right? Let's just go to our presentation also. So structure, targeted liquidity, equilibrium, price imbalance. I want you to all imagine you're jumping on each of these blocks, right? You've jumped on structure. You've jumped on targeted liquidity. You've jumped on equilibrium. You've stepped up to price imbalance. You found the right price imbalance. This becomes key level mastery. So when you look at a chart, right? When you look at a chart, these key levels are not random. I haven't made them up. They've been backed with the system, and then more importantly, they've been backed with the order flow. Okay, so if you look at Tuesday's level, which is roughly up here, 75, 78 to 80 area, we can see that we have obviously our structure. We're above the 50%, so we're in premium, and we have a price imbalance from premium. All right, it's very interesting that this key level came from the 16th of June, and this is why I built Flow State. Because I get questions of where did that key level come from? Why is it a key level? And how did you know what was going on in that key level? If you have those questions, Flow State will answer them. And the premium footprint execution process is the manual way that Flow State has been engineered from a developer standpoint. Okay? I don't want to get too technical and start giving lectures on how this trade was taken, but all my levels are in premium, 75, 78. If you trade ES, go and back test this level. If you trade NQ, take the same time of day, Tuesday, New York session, go and back test it. We melted on both of them. And go and ask yourself why, right? Why was this a key level? Because we followed the process, right? We followed the process. We had structure. We had the most recent highs and lows. We were above the equilibrium, so we were in premium. So we were selling high, right? We were selling when price was more expensive. And we tapped into the right price imbalance, which meant we had the right key level. Okay? And that's called the 4-step positioning process. It's how you elevate your support and resistance, your supply and demand, even your trend lines if you want to go that way. I don't recommend it. But if you trade support and resistance, supply and demand, if you trade key levels, this 4-step process will change and transform how you do it. It'll become simpler, more streamlined, and hopefully more scalable. Okay. In fact, I want you to type STEP in the chat. If this appeals to you, just type STEP in the chat. Type STEP in the chat. Okay. Because what I've done is I've actually created a free guide on key levels and how I find them. It's completely free. You're going to download it now. All of you are going to download it. I just need at least 3 people to say STEP. I need 3 people to say STEP for me to send in the chat. Just 3 people need it. right? So just literally 3 people. How many have you got right now? So we've had step, step. Okay, we've had 3 step, 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 step. All of you've got step. Fantastic. So this trade over here, for example, this short, okay, without going into the order flow specifics, this short started at around 10, a bit of an early entry for me. It wasn't perfect. Now, this is the other thing. When your level is correct, you can be a little bit sloppy with your entries and still make money, right? It was a really good, level, if I if I say so myself, right? It was a great short, right? Roughly a 2R risk reward. So I had taken partials at this point. There you go. So risked about whatever it was, risked about probably about $900 or $1,000. I did trail my stop down to here eventually, and made about 1.3. Okay, so these trades like this, they look impressive, and I don't want you to focus on the entry, the risk reward, the monetary amount, nothing. I want you to focus on where I took the trade, because the key level is the most important thing, and I cannot stress this enough. So if you feel like I'm repeating myself and you don't like it at this point, feel free to get off the webinar, because I'll say one more time that key levels are essential, and there's no point. I make no apologies in that. And on that note, I'm actually going to put the 4-step positioning guide in the chat as well. So just going to do that. Why is it not working? Interesting. Okay. Just going to do that now. Give me 1 second to do this. Okay. Doesn't seem to be working right now. We're going to come back to this. So in other words, how can I get this to go here? Okay, it's not doing it. We'll come back to it. Don't worry. Okay. And so this is 80% of the work. More, I know all of you said step. I'm going to be telling my assistant to go and put it in the chat right now. All right. So I'm going to do that right now. But before we move on, or we are going to move on now, we're now moving on to the next part of the system. Because if you remember the last part of the system, right, we actually had positioning. This is the 4-step positioning process. This is where we move on to price. Okay, so how do we read price? So for those who have come across my material before, you will know about the read method. Okay, the read method is one of the most important things in your trading, because when you have the right level, you need to know what's going on in the level. So in other words, you need to read order flow, right? There's no two ways about it. You need to read order flow. There is no other way of doing this, okay? There is no other way of doing this. You've got to read the order flow. So what do we mean by read specifically? We want to recognize the bid and ask, right? So what does the bid and ask actually mean? We want to recognize what's going on, right? We ultimately want to recognize what's going on, right? We need to know what do the numbers actually mean, right? What do the numbers actually mean? Actually, on that note, if all of you look in the chat, I've pinned something in the chats. It's essentially a URL link which you can use to immediately get access to the step process. Can one of you make sure that actually works? Can one of you just make sure that works? So go to the chat, copy and paste that link into a URL. Can someone tell me if you've managed to get the 4-step positioning process checklist? Can someone confirm that's actually working? Can someone confirm to me that's working? We've just had someone join the chat. Hey, Ferdinand, hope you're well. So basically, what we've done is we need everyone to get access to the 4-step positioning process. So if you look at the chat, there's the downloads 4-step positioning process guide, and we need everyone to get that in PDF form. Okay, so it didn't work for Howard. So
I tried to paste it also. It does not work. It says it's a local file.
Okay, fantastic. So what we're going to do is we're going to unpin that. We're going to forget that. Ferdinand, could you just quickly do this, right? So what we need is Ferdinand, I've sent it to you separately on DM. If you just go to our messages, the 4-step positioning process needs to be created in a free guide for traders to download. Can you just quickly do that for me now, please? And while Ferdinand is doing that, we're all going to move on. Okay, so Howard and Simpson, they've both said that. So Ferdinand, could you just quickly go and do that? Thank you. But we're going to move on swiftly because right now we're moving on to the read method. So when you look at footprint charts, right, let's just break this down. When you look at footprint charts, this here, a lot of people say it looks confusing. Okay. Now it looks confusing to the untrained eye because the untrained eye has never been able to use this, right? So if someone told me land this plane, bit of an extreme example, if someone told me to land this plane, I probably couldn't do it. Okay, so what we need is we need to build systems, we need to build mental frameworks, we need to build mental frameworks and models to help you understand what's going on in the chaotic but often simple world of order flow. It's not as complicated as you think. Okay, I'm just going to leave you with this thought, or I'm going to start you off with this thought. Most skills can be trained in 20 hours. Most people spend 20 years delaying the first hour. Now, if you know who said that or where that quote comes from, feel free to drop it in the chat. That didn't come from me directly, but I loved hearing it from the guy who said that. He goes, most skills can be learned in 20 hours. Most people spend 20 years delaying the first hour. Don't let it be you. And so how do we do that? What's a quick way of speeding up time, if you like? It's by building systems. Okay, so first we want to recognize the bid and ask. We want to evaluate the delta, we want to assess the aggression, and we want to detect zeros. This is how you read footprint charts. You need to know what the left and right number is talking about. You need to evaluate the information they're telling you. You want to assess who's aggressive, buyers or sellers, and you want to detect zeros. Because when you detect zeros, you are in a much more powerful position of spotting reversals. Now, a lot of people get confused on detecting zeros, so let's break it down. There were zeros here, here, there were zeros here, here, here. There were zeros everywhere before the big reversal happened. You can't see the zeros here, but you sure can see them here. And so by detecting zeros, you can see where orders or where essentially trades are being dried up. And so it's literally telling you with a lot more clarity, confidence, and then ultimately conviction to enter short. Okay? This is order flow made simply. Let's move on. Okay? So evaluating the delta. So let's now go into a little bit of technicals on order flow. So what do we mean by delta? Now, in the markets, there are only two types of orders on the footprint chart. There is the bid and there's the ask. There's the aggressive sellers and the aggressive buyers, right? Aggressive sellers on the left, aggressive buyers on the right. Just by you understanding this, you are 50% there. Now let's do the other 50%, which is the delta. The delta is the ask minus the bid. It's the ask minus the bid. So it's the right number minus the left number. You have now completed the additional 50%. So you now 100% understand footprint charts. Done. The other sort of, let's say 19 hours and 58 minutes is about practicing. Okay? Don't fall off in the 19 hours, 58 minutes. Don't do that. So positive delta shows up in green or blue. For me, it will be blue on my chart settings. Positive delta means that the ask minus the bid is a positive number. Wow. And the positive delta just means that there are more aggressive, you guessed it, buyers. Okay? There are more aggressive buyers, which in simple terms, right? If I was explaining this to a fifth grader, as Howard kindly told me, a fifth grader is someone who's 21 years younger than me, so they're 10 years old. Okay? If I was explaining it to someone who's 10 years old, I would say positive delta means that there's more market orders trying to drive price up. So there's more people trying to push price up. There's more people trying to drive price through the ceiling. But then you have negative delta, which, as you guessed, is the opposite. There are more people at that price trying to put a hole in the ground. They're trying to drive price through the floor. Okay? And so that is what it looks like. And it's the simplest thing in the world. And if you can understand this, it will transform your trading and it will give you that C3 connection code. You want to have clarity, confidence, and ultimately conviction. This is how we do it. Okay? You want to evaluate the delta. So this is blue delta, which means, if I was explaining this to someone who's 21 years younger than me, and this is how I want everyone to think, because when you're trading live, emotions can be there. You need to think fast. In order to, when you have emotions and you need to think fast, the best way to do that is by simply breaking things down, right? That's all you have to do. That's all you have to do, right? That's all you have to do. Literally nothing else, okay? Now, vice versa, red delta means that there's more people trying to drive price through the floor. So there's more people trying to drive price through the ceiling. There's more people trying to drive price through the floor. Okay? So, on that note, I believe my amazing assistant has come to the rescue. Ferdinand, thank you so much. Ferdinand's link, and also I'm going to post the same link as well. I'm going to pin it. Ferdinand's link has access, and also my link is the same link. It has access to the free guide for the STEP positioning process. So unfortunately, we've had to go back in the presentation. The 4-step positioning process can be downloaded and used, and it should be next to your charts completely for free. So not even $1. And it took me 3 years or 4 years to build this. This is in your laps completely for free. So I want all of you to download this, right? There's no excuse for not downloading this one. Amazing. Amazing, right? So I'm going to move on in the presentation, and all of you can have access to this as well. Thank you, Ferdinand, for your amazing assistant, as always. As always. And here we have the delta. So here we have the evaluate. Okay, this is what the evaluation means. Okay, does that make sense? In fact, what I'm going to do is I want you to drop. Okay, let's look at it this way, right? Ask represents positivity and bid represents negativity. So if you understood what I've gone through, type ask in the chat. If you haven't understood, type bid in the chat. Let me see. Are we asks or are we bids? What side are we on? Are we ask or bid? Ask is positive. Those are the buyers. I buy your ideas. I buy your thoughts. Or I have no idea. I'm negative. I'm red. I'm bid. So are we ask for negative? Or are we bid for... Sorry, are we ask for positive or we bid for negative? Let's see how many bids we have. I'm interested in the bids, you know. I'm interested in the bids. The bids are what gets me. Ask. You see, the way footprint charts work, unfortunately, is that if an order isn't hitting the ask, it's hitting the bid. So I see more people hitting the bid, which means that we have negative delta in the chat right now. Is that true? Maybe if I switch on my camera, there'll be more asks coming. So what's the delta in the room right now? Right now, it's in the chat. It's pretty negative delta, right? We have more aggressive sellers. Right now, it's looking like sellers are in control. Supplies holding, right? We've got 2 people in the chat who have said ask. Honestly, no one else. Is anyone else trying to join? Nope. Anyone else? All right, let's move on. But it's a shame. Only got 2 people saying ask. Let's do it. So now we're going to move on to the trap trading framework. And so this is where order flow gets a little bit technical, but I'm going to try and make it as simple as possible. Now, I want you to think about this, right? The way markets work is it traps orders before going in the opposite direction. Markets will trap orders before going in the opposite direction. And so what this means, in very simple terms, is if you look at this trade here, this trade we obviously broke above the level, not below it. The reason we broke above the level, or the reason a buy trade would be significant here, is because we had, from the previous slide, we had lots of negative delta, which means that sellers are trying to slam price down, right? Imagine this being a floor, right? This is obviously a floor. We had a huge amount of selling energy here, selling energy. What's so interesting is that we had a green candle. A lot of people look at candles and say, oh, it was engulfing, it was this, it was that. None of that means anything, right? Remember, we're not writing a story. We're not talking about a big candle, a nice candle, a fast candle, an engulfing candle, a moon candle, a shooting star candle, or whatever it's called, a moon candle, a lollipop. It's none of those things. It's about seeing who's trapped at the right level. That's all you have to do. Okay? So why do I call it the trap trading framework? You want to look at the trader reactions at price. So you want to look at what traders are being involved, so bid and ask. How are they reacting at that price based off the key levels from positioning? Okay? So you want to step into the right room using the 4-step positioning process. What Ferdinand and myself have very kindly put in the chat. I'm going to put it in the chat one more time. If you haven't got the 4-step positioning process, please download it now. I've just put it in the chat. But now you've stepped into the right room, okay? You followed the 4-step positioning process. Then you've gone through the read method. You've read the room. You've gone through the recognize, evaluate, assess, and detect. You've gone through that process. So you understand pretty clearly what's going on. Okay? And now you're trapping the main message. And the good thing is with trading, there's only two types of messages. There's buy messages and there's sell messages. So you want to step into the right room, you want to read that room, and then you want to trap the main message. And this is how Tuesday's trade was caught. Okay? So you want to see the bid and the ask, so traders, you want to see how they're reacting at a certain price. Okay? So here, in very simple terms, we stepped into the right room, which is the key level. We're using order flow, or we're reading the order flow here. And then we're trapping the sellers to buy. Okay? That's all you have to do. That's it. That's all you have to do. And what we're going to do is, we may as well do this. We're going to flip this logic on our head when it comes to a trade like this. So let me ask all of you a basic question. In order to take a trade like this, a short, right? Who was being trapped? Was it the buyers? Was it the sellers? Just type it down. Was it the buyers or the sellers? Type in the chats, right? Is it the buyers or is it the sellers? Just want to make sure everyone's on the same page here. Is it the buyers or is it the sellers? So Simpson says buyers are trapped, right? Who agrees with Simpson? Who agrees with Simpson? Who agrees with Asaya? Who agrees with Asaya? Buyers are trapped. Buyers are trapped. I'm gonna write the answer in the chat. It's buyers. Well done. Buyers were trapped. And the reason why is because we see a lot of positive delta or aggressive buying and no follow through. Because if these aggressive buyers were successful, they would have broken above your key level, right? They would have broken above 75.85. But they kept breaking lower on 1, 2, 3, 4, 5, 6 occasions down to 75.75. All right. So this level was supporting who? Who was in control at this level? Type in the chat. Who was in control at this level? Right? Who was in control at this level? Who was in control? Someone type it in. Howard says sellers. Howard says sellers. Howard says sellers. Sell, sell, sellers. Awesome. Very good. Very good. Very good. Very good. Okay. Now we're moving on, right? We're moving on to another concept, right? Which is what I call, it's what I refer to as the price imbalance. Okay. So you want to step into the right room, you want to read that room, and you want to trap the main message. Now, the trap is the fuel to your trade. Okay. Think of it this way. So some people you've all heard of the term inefficiency, void, fair value gap, inverse fair value gap. These are all those sort of ICT smart money concept terms. The question is, how do you actually use that to make money? Well, the way you use that to make money in the system I've just described is by using this. Okay. You first want to identify where your key level is, right? So all these key levels are based off a specific price imbalance. Then we follow this system. Then you want to read what's going on in those price imbalances. So you must use order flow to make sure your fair value gaps have long-term profitability. And then you want to trap the main message. Are buyers in control? Are sellers in control? That's all you have to do. Okay. Okay. Now we're going to take that and we're going to go into the bolt breakout blueprint. We're going to go into the bolt breakout blueprint, right? We need to know who is in control, right? We must know who is in control inside of this key level, right? This is super, super important, right? So how do we do this? And how do we sort of turn this into an entry model, right? How do we turn this into an entry model? Well, the way that we do this, right? The way we do this is by using what I call the bolt breakout blueprint. We use something called the bolt breakout blueprint. So this stands for break, optimal retest, liquidity absorption, and then trigger. So I want all of you to imagine the spring over here, right? Imagine the spring. All right. Now, let's say price comes into a support area, right? An area of support where you want to buy from. Okay. How does support form? Now, I ask a lot of traders this, right? I mentor a lot of traders. They'll say something like, oh, I wait for price to come to my support area, I look for a buy, or look for a demand area. Demand and support, essentially the same thing. I look for a couple of taps and then I enter. Okay. So I mentioned earlier that you should be able to explain your strategy to a fifth grader, someone who's 21 years younger than me, right? So someone who's 10. That is true. But the problem is that if a 10-year-old could take your strategy and overnight use it to try and make money, that means you haven't got a strategy. That means you're essentially drawing pictures on a chart, right? Understanding the fundamentals of how a demand zone forms will transform your trading through the C3 connection code. It will give you clarity, confidence, and ultimately conviction behind your support and resistance areas. And I want all of you to hop off this webinar with that conviction, or at least understand how to get that conviction. Okay? So first we're looking at a break. Price must break above your zone. Then we have an optimal retest. And so a retest isn't just one or two candles or some weird fancy wick or whatever. A retest, I want you to imagine prices pushing down on that spring. So right now the spring is, in a zero energy state. Now you're pushing down on that spring, right? Look at that. You're pushing down on that spring. Can you all see that? You're pushing down on that spring. Now, when you push down on this spring, imagine what the spring is going through, or imagine what you are feeling on your hand as you're pushing down on that spring, right? It's not going to be easy. And the deeper you push down, the more you're going to feel that energy or that force that the spring is trying to push back on you. Next, we have liquidity absorption. So when you have liquidity absorption, what's going on, for those who've understood little basics of physics, what's really happening here is that the spring is storing energy based on you pushing down on it. And this is exactly the same as aggressive sellers and passive buyers, right? It's the same concept. So remember we spoke about the Reed method over here. This is the spring, right? So the spring is pushing, or this is the energy pushing down on the spring here. So sellers push down on the spring, sellers push down on the spring, sellers push down on the spring. But the spring force is great enough to push your hand back up. And this is exactly how I want you to think of support and resistance zones. So there's no point guessing, gambling, being Picasso on the charts and drawing up trend lines and triangles. There's no point even trying to catch 10 moves or even one move, right? You want to think about where is the market pushing down on the spring. And Howard has said something insightful. Howard says the more force, the more absorption of energy from the buyers. In simple terms, yes. In simple terms, yes. Here is a classic example where this is the 5-minute chart, right? So 5, 10, we had about 15 minutes of pushing down on the spring. Market could not break the spring. We couldn't even get to the floor, right? This is obviously a very compact spring, or as Howard correctly said, the more force you have pushing downwards, the more absorption energy pushes price upwards. Perfect, yeah. So the way you want to think about this is that the passive buyers, or the limit orders, the buy limit orders, are the energy in the spring. Basically what Howard said. If you look at the chat, Howard put it nicely. All right. And then price moves up. And this is the entire bolt breakout blueprint, because we look for a break. We then look for a retest where market's coiling that spring, pushing down on that spring, right? This is where order flow becomes important. You cannot determine the absorption, or you cannot see the spring being compressed properly if you don't use order flow. And then you pull the trigger after understanding all of that. Coiled, loaded, and then you want to snipe and give a sniper entry. Okay? Fantastic. So, if your breakouts feel random, it's because you're not thinking about it through the lens of a spring. Okay? This is how a demand zone works. Now, if you flip it on its head, this is how a supply zone works, right? All you're doing is this time, we're compressing price upwards, right? So how does the demand zone form, right? Price comes into a key level. Very important. It comes to your correct key level. There are limit orders resting. The aggressive sellers push down on that spring. And when the spring force is greater than the force of the aggressive sellers, that is what creates a demand zone. And so the key thing to understand is that we do not draw the zones. We simply understand where they've been in the past using order flow. We then wait for price to come back to those zones, and we apply the spring coiling mental model using order flow to give us a direction, to give us a trade. And that's how it does it. So it's invisible on candles, and it's pretty damn obvious in footprint charts. Okay? So here's an example. And what I'm going to do is this is not an example from Tuesday. This is another example. But we're going to use Tuesday's trade to help us. Okay? So let's break it down. Here we have a spring. Okay? Market pushes up on the spring, right? Imagine you're pushing up on the spring. And this is exactly what happened on Tuesday. So if you go back to Tuesday, this is what happened, right? So if you just take a look at here, for example, if I break it down, where were we? Yeah, here we are. So as you can see, let's actually download this image. Let's open it separately and let's go back on the presentation. So here was Tuesday's setup, right? Here was Tuesday's setup. So what you can see here now is the spring is being coiled, okay? And that spring is being coiled here inside of the key level. It starts here. This is the start of the spring coiling. Hopefully you can see that. Buyers are pushing price up, right? Here is a spring coiling. Here is a spring coiling. Here is that spring coiling, right? Now, the reason why the spring is coiling is because there is that force or that push, right, of the aggressive buyers trying to break above the zone. It's trying to break that level, right? This level here. On ES futures, going back test 75, 85 to 78, going back test this area on footprint charts, you will see the spring being coiled exactly like this, right? You will see that spring being coiled 100%. You're going to see that spring being coiled, okay? Now, when the spring is loaded and we let go of the spring, that's when we have the move to the downside. So this is the absorption of buyers, okay? And this is where we want to use the read footprint example. So we want to recognize a bid and ask, evaluate the delta, assess the aggression, and detect zeros. So we go positioning, price, proof, and precision, right? Does that make sense? I want you to type yes in the chat if you're not lost. I want you to type yes in the chat if you've understood what I've just been through. Because this is the fundamental, this is basically how support and resistance forms, right? There's no real other way to do it, in my opinion. Okay, so yes, yes, yes. We have some yeses coming in the chat. Fantastic. Awesome. Nice, nice, nice. Okay, brilliant. Okay, awesome, awesome. Let's move on. So right now, if your trading feels like it's in the dark or it's been in the dark and you want to try and fix that, this is how we do it, right? This is how we fix something that's in the dark, right? We go through the read method: recognize, evaluate, assess, and detect. Okay. Now, here is a bit that a lot of people sometimes maybe look forward to, right? Here's the bit that people look forward to. This is this week's fast action bonus. Now, it's a fast action bonus because it's available for the next 24 hours. Okay. The bonus disappears over the next 24 hours. So it doesn't disappear the moment the session ends, as it says at the bottom. That's a mistake. You can ignore that. This is a fast action bonus because it's for people who want results a little bit quickly and who want to progress. Because remember what I said, it takes 20 hours or even 10 hours with the right knowledge and right guidance to learn any new skill. Order flow is no different. However, most people will spend 10 weeks, 10 months, or unfortunately, in extreme cases, 10 years before they begin the first hour. So I want to begin that first hour with you, and I want to make sure it's actually 10 hours and not 10 years. And so here's how we're going to do it. The $500 per day trading checklist. So all of you have the free checklist for the S.T.E.P positioning process. There is actually S.T.E.P, read, trap, and bolt. Okay? There is S.T.E.P, read, trap, and bolt, right? So as you can see over here, right, there is S.T.E.P, read, trap, and bolt. So right here, there is S.T.E.P, read, trap, and bolt, right? That's the $500 per day trading checklist. And so the value of $500 that it's obviously worth today will be priced at $1. So you will be able to access the $500 per day S.T.E.P, read, trap, and bolt checklist for $1. Okay? To me, it's a good deal. Then you have 3 months access into school and the group coaching calls. So this is essentially the live trading area where you get to see me break down levels, my shorts, my longs, my break evens, my wins, my losses. You get to ask me questions on a one-on-one coaching basis in school for the next 3 months. I'm happy to extend it to 6 months if you have any additional queries after the 3 months. Now, typically 3 months of school is valued at $300. However, over the next 24 hours, I'm opening spots in school for only $1. Okay? Next, you have lifetime access to FlowState. That is the software that's so dear to me and my developers' hearts, who they're not here right now because they're still working on FlowState as we speak. So they're not here right now. Ferdinand is one of the developers, actually. He's a very talented guy, assistant as well as developer and all sorts of other things. So I don't think he's here in the presentation. He may have escaped us early because he had to go and finish off building FlowState. In fact, if you want to see if you want to see flow state, it looks something like this, right? Flow state, our chats for flow state, it's just chat after chat after chat. How's flow state going? It looks something like this. We use a little bit of AI to help us as well because we're very stressed and coders can't do it all the time by themselves. So so again, how can we take this and make it easy, right? We want to make this easy for people, right? And flow state will help you do that. Okay? Flow state will help you do that. And so flow state, value at 1750, right? We're bringing this value down because we're trying to make it easier and better and cheaper and faster and more efficient for traders to actually read price action and not guess price action. So the value of 1750, and I'm so happy my developers are not here because they would probably add 2 zeros to the end of that with the amount of stress and hair they've lost due to me. And also you guys, maybe not you guys, just me. That's going to be for $1 today. Right, lifetime access to FlowState and my one-on-one additional lifetime support to help you use FlowState, $1. So for right now, you spent $3 with me. Not bad. You get the 100K funded roadmap, which tells you how you can pass a prop firm challenge by finding your levels with the step process, reading price action with the read process, using the trap method to understand order flow, and then build a 4-step mechanical and repeatable entry system to catch 1 or 2 R per trade and make the $500 to $1,000 per day that you wish on a 100K funded account or more if you want. So at the $1,000 at 1% per trade that it's worth, you're also going to spend $1 on that. So right now you have spent $4 with me so far, right? But it gets better, right? You might have to spend $5. You get 3 private one-to-one sessions with me and the A to Z order flow training. So not just the library, which I know some of you have purchased already. It's not the library. You're going to get in-depth training on the step, the read, the trap, and the bolt method. With 3 private, actually no, let's make it 4. With 4 private one-to-one sessions, each session, losing my tongue. Each session is going to be I'm really losing it. Each session is going to be dedicated to each individual component in the premium footprint execution process. So it's going to be 1 session for step, mastering key levels, 1 step for read, so understanding and reading price action, 1 lesson for trap, so understanding the zeros, detecting zeros, seeing buyers trap, seeing sellers trap, and then putting it all together into a repeatable, reliable, and robust entry system to build that 100K funded account with FlowState in school and with the $500 per day checklist to help you along the way. And so at the $750, so 4 sessions is worth $1,000, so $250 each. At the $1,000 that it's worth, I'm going to make you spend $1, right? So this week, you are going to get access to all of this, right? And you're going to get access to the school community. In fact, 6 months of school community, $500 per day checklist, 100K roadmap, 3 private one-to-one sessions, and a live trading checklist. All of this for the next 24 hours is going to come up to, drumroll, $297. That is this week's offer, $297. All right, that's going to be this week's offer, $297. Okay, so this is obviously something that's available for the next potentially 24 hours. We may extend it, but it's going to be available for the next 24 hours. Okay, and so I put a link in the chat for that. So anyone who's interested in starting that first hour and avoiding the delay, right? This on the screen is everything you need to get started in order flow, literally, and learn it to a pretty sophisticated level to get funded. Why? Because you're going to have 3 up to 6 months of access to school, which gives you my one-to-one support, which you wouldn't get outside of school. You get access to one-to-one coaching calls. I'm going to add that in as well. One-to-one coaching calls, some group coaching calls, the $500 per day checklist, lifetime access to flow state, 100K funded roadmap, and four, not three, four private one-to-one sessions. All of that for $297, right? And the value of this would be in the thousands. I'm taking a zero off, 297. 297. Now, the main thing is, does the link actually work? It does for me, right? 297, and you get everything on the screen. No questions asked. No questions asked whatsoever. Okay. So, does anyone have any questions on what we've been through so far? No. In that case, we are going to swiftly move on. Okay. Because now we're going to move on to the 4-step positioning process. So we're going to piece everything together so that we can form a reliable, repeatable, and robust entry system. So we have positioning, key level mastery. We have price, understanding how to read footprint charts. We have proof, so understanding who's trapped. And then precision. We want to execute with precision. And this is the order, right? So here's the thing. When you understand which key level to trade from, you understand the price action inside, you know who's trapped, and you take a good entry. What you want to understand is that that key level will print itself onto the next day. So if that sounds confusing or whatever, let's just break it down. So if you look at the way these key levels actually form, right? Let's just go to today's market, because today's market was probably the best. Yeah, such an accurate key level. 75, 30 to 40. So let's break it down. So this was the level. This level had been holding all the way since the 16th or the 20th of June, right? July it held. Okay, July it held. And this is where the trade prediction came from. So if you look back here, so this was 6 hours before I posted this, 4 hours ago. As you can see, 75, 30 to 40 was a key level. Okay, it was a key level. And your question is, or your determination, your approach should be, how do I get this now? How do I do this? Right? So you want to think in terms of the 4 P's, right? Positioning, price, proof, and precision. Okay? So a couple of things this is going to solve is FOMO. If you have FOMO, it's typically because your level is not right or you're not reading price action at your level. Okay, so chasing moves can be fixed with the read process, because when you read what's going on, you're no longer going to chase. You yourself are going to get to a point where you have so much confidence and clarity, you have the conviction to stay out. Right? Clarity, confidence, and conviction. That's what we're building here. All right. Next, you have no system. So if you feel like you have no system, that's typically because you don't. And so the 4 P's are going to help you fix that. Right? That's where the 4-step positioning process comes in. So the free guide that all of you downloaded, that guide gives you this S.T.E.P. It gives you the steps that you need to execute with precision. Okay? Next, you have the real edge, which is piecing everything together. All right? No system goes by itself. So you have the step. You need to know read, you need to know trap, you need to know bolt. And all of these 4 processes come together in a very reliable way. All right, it's important to have this. If you want to execute with precision, you need to have a good level to begin with. Okay, so this is my inspiration, right? Jesse Livermore, he made over $100 million trading order flow. All right, so my question to you is, if he was using order flow, why wouldn't you? If that makes sense, you know what I'm saying? If he was using order flow, why wouldn't you? Just a crazy thought. Just a thought experiment there, right? If he was using order flow, why wouldn't you? And can you actually get funded, right? Will this help you get funded? Well, it got Luca funded. It got our Australian friend also. I think he was trading a funded account, 9% for a week. It also got our guy Ben from the UK. Hey Sandy, thanks for not giving up on me. I've just taken out substantial payment, and I finally gained my consistency. I've moved back to the west of the country, but we're back in London. So he lives about 4 hours away from me. Now I can actually afford to go on that burger with you. All right, so these are what some of the people are saying. And so is order flow hard to learn? Asaya, thank you so much. If you're still here in the audience, is he still here? I think he's still here. Asaya said something which really,
Yeah.
really kind words. There you are. Thank you, Asaya. He goes, this is a very helpful breakdown, especially anyone useful, typical setup. We're in a new price range without defined key levels, right? So again, over trading can be avoided if you have the right level, because you literally have to sit there and wait for price to uh give you a you have to wait for price to get there, and then you hit click buy or sell. So it's simple when you have a system. And here we have Aaron saying, again, kind words, just so you can see that people have benefited. So there we go. Another guy who I worked with him a few months ago, right? Nazram, right? So listen, he's an utter professional taking places. There you go. Again, the kind words from everyone. Again, Aaron, again, kind words. So your videos give me so much confidence. I'll be better at trading in the future. So and yeah, and that's sort of everything I wanted to sort of break down in this particular webinar. That's all I have to say. So anyone who's interested in the offer that I'm giving here, it's $229 for essentially the next 20, probably the next 24 hours or so. Gonna put the link here for anyone who is interested. This is probably the best and the most generous offer I've ever given in a webinar. Prices are coming down, but offering is going up. 4 one-to-one sessions completely for free. And yeah, so I don't have any anything else. We've kind of been through the entire process. We've been through the whole process, and just going to open up the floor for questions. So this recording is going to be up